Welcome to the Pension Insurance Corporation Hot Topics Roundtable series. My name's Jonathan Stapleton, editor of Professional Pensions magazine. Joining me are our panellists, Sorca Kelly-Scholte, Managing Director of Client Strategies and Research at Russell Investments, Pete Coyne, Partner at CMS Cameron McKenna, and Shah, Head of Business Origination at Pension Insurance Corporation. Welcome. Our third Hot Topics session will look at defined ambition. Before we begin to discuss this more generally, Sorca, can I ask you some specific questions on this, please? Firstly, what are the benefits of sharing risk, and more specifically, how will these the new models of defined ambition that we have open to us help?
Well, the benefits of sharing risk, by definition, is that they reduce the burden on the individual of that risk, and thereby enable people collectively to take more risk and pursue more wealth-generating types of strategies. And there's a range of estimates about what's possible here, depending on the degree of risk sharing and what that means for the ultimate investment disposition of funds. But some people say it could be as much as a 30% improvement in the end outcome in terms of income to an individual. So quantify it as you may, but the principle is that it should enable people to have a better retirement and more income in retirement.
Thank you. And what are the key obstacles that will need to be overcome if these new DA models are going to succeed?
Well, I think I see three principal obstacles. The first is scale. I think defined ambition vehicles will need to get to scale pretty quickly, because risk sharing really only works if you've got a large group of individuals. It's not so effective if you've only got a small number of individuals. The second is that there'll have to be some build-up of capital to support either insurances or reserving to smooth risks across time, and that will take time, and we need to think about how that capital base would be built up, and also we'll need some actuarial oversight to manage the process. And the third is that both of those two things will need strong governance, and they'll need strong oversight of somebody who's representing the end investor. And not-for-profit trusts, I think, remain probably the best candidate for that type of oversight. So I think those three challenges together mean it's difficult to see corporates wanting to sign up to create one of these vehicles themselves. It's hard to see how they could overcome those challenges. So if it were to succeed, it's really looking at kind of other participants who could foment the creation of multi-employer schemes. So for example, a nest or a trade union might step into that role to be able to create that for sponsors to support.
Thank you very much indeed for that. Jay, what do you have thoughts and views on defined ambition?
Well, I think what Sorca described is a good description of with-profit funds, actually. A sharing of risk between a provider, whether it's an insurance company or a pension scheme, and the individual, smoothing capital requirement to back all of that. So I wonder whether there'll be a return to the with-profits concept. The other comment I'd make is, let's not get into the complexity that DB pension schemes have got themselves into over the last 50 years. Pensions are complex enough as it is.
Thank you very much. Pete?
I agree with Jay. I think you've got to get the level of compliance and the level of regulation right, I think, in order to make defined ambition in whatever form work. I suppose the other thing that occurs to me, given we're a few months away from new DC flexibility, is to what extent that has undermined the need or demand, perhaps, in the market for defined ambition. So I think that will probably only become clear over the next few months.
Thank you very much indeed. Thank you. I'm afraid that's all we have time for this roundtable. All that remains for me to do is thank our panellists, Sorca, Pete and Jay, and to thank you for listening in. I hope you'll join us for our next roundtable debate soon. Thank you.